All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for April 10th, 2023. We'll start with the swing portfolio with Alcoa. And these are all on 30-minute charts. So this is a 1-day look back. This is your 5-day look back. The blue line is your 10-day high. 5-day low and 10-day low, actually. We've got our Four Seasons of MACD here. Here's the zero line. This red river is a 30-period Bollinger Band on the signal line. So that gives us something like a range of normal. So we're looking for moments when winter turns to spring. And leaves the Red River, crosses the zero line, and takes off. That's growing season. And it's not unusual for that to coincide with a nice entry here on the PSAR flip. So this was a pretty much harsh winter selling from the 5-day high or 10-day high to the 10-day low. Found support for 2 days. PSAR flipped. So yesterday in the afternoon, we took the orderly entry. So this is after the morning shenanigans, but before the closing move. So in the doldrums of the day, we get a nice PSAR flip. Failure to fail further. Put a standard risk box on him. It closes well. Today, it gives us a nice move. There was an opportunity in here for a second position because we were 2 hour in hand. But I feel pretty good at +2 on this one. I'm going to move my stop from here to just under the PSAR so that we lock in no lose plus dinner for 2. I like that posture right now in Alcoa. AI, the software company. This one was the big sell-off from 34 on the hedge fund assertions that they were using deceptive practices. We got a couple nice intraday shorts on it. It has stabilized. I treated this as a COTA 2 today. And on the PSAR flip, I just took an orderly entry. The Red River had responded. It's very close to turning into the summer. And if this only gets at 50% retracement, that's going to be 1, 2, 3, 4, maybe even 5R. So I like the chances. And if this fails, I'll be short with a second position here. Standard work. Caterpillar, yesterday, we were, or actually Friday, I should say. Thursday, because of Easter. We were short 3 positions on this thing. And today, it opened in an orderly fashion, started to take off. So just to keep that third position in the money slightly, we really just made bank on those 2. So that's about 1, 2, 3, 4, 5, 6, 7, 8. About 8 on the first one. 1, 2 on the second one. So 10R on the first 2 positions, and the third position's probably a scratch. It closed pretty well. It didn't break out further. I think it's just licking its wounds. But if this holds tomorrow, I think on a deep value play, that's a pretty good trade. It feels like to me that if it was going to fail, it would have failed today. So I would be surprised by a failure tomorrow. Not impossible, but I'm really eager to play the long side on Caterpillar, great American company. Cliff Natural Resources, so Thursday, we got that early morning PSAR, tight risk, 4, 5, 6, 7. That first one is holding 7. The second one is holding 1 for +8, and nothing but goodness. Now, it's gotten most of the way back up the stack. This is where the test occurs, up around 1850. So I'll be watching for that move carefully. If it starts to fail anywhere in that journey, I'll happily cash 8 plus on those two. But if it can get above here, I'll be looking to add a position because this is really the resistance level right here. That's sort of the anomaly. It's this resistance level right here at 1850 that matters. And then if it gets out of that 10-day range, well, then it's just off to the races. And the MACD is above the zero line, so this is in the summer. And it's not that far away from the Red River yet, so this is still, this is what success looks like in the growing season. You know, planting this in spring, that's what a spring planting looks like. Spring to summer. And that's what that looks like. That's what 10R looks like. CVS, so we had, this was Wednesday and Thursday of last week, bank. And then today on this collapse, I went ahead, took the short position. It closed poorly. This is about +2. And if this price structure here breaks, this gap is not any support at all, and it'll come down into here. So the reason to hold that position was on a reasonable chance at getting this move, and I would look to, on the first sign of weakness, I'll look to add a second position and then try to harvest it somewhere around 74.50. So that's a good trade. It could become great. Dish Network, this was the Godzilla. Nothing really happening here. We got the gift on last Thursday. Today it kind of stabilized in here. This could really go either way, but it, I don't know. This is really a range of indecision. I think it has to break out of that daily range for me to be interested. I could maybe see, if I really wanted the short side, I think I could play this here and short at 875 and not wait for 860 to break down, because that's kind of a price anomaly right there. This is really the support level. So if this fails here, I think I can be short here. And then if this has to break above the dragon, really, and the PSAR flip to go long. So that's your risk box right there. Then on the upside, it has to clear, and then it can get to here, and then the 10-day high. So that's your price ladder to the top. I think I would just play one position until it really clears out of the 10-day high, which has had a double, almost a triple top already. That would be the most surprising play. This one, I think, is the more likely play. Devon Energy, today was a spike move up and then a decay. Did not break key resistance, but if it breaks below 53, I will be short. Upside, I think we have to wait for. This. So that to me is what the zero state risk box looks like. About $1.25 of risk, which is about 2.5 percentage points. I think that's a reasonable play. Electronic Arts, I took the fake one go-to today. We haven't heard that term for a while, but you know, you've got this strong consolidation after a really nice run. And then today was just a little gap down and sell off to shake out the weak hands. So I bought the 1, 2, 3 tight risk box. It closed pretty well for +2, and now it's poised right at the top of this stack, ready to go. And I'll add a position above 126. EA it's pretty much recovered all of its big gap down, which is what made this thing a Godzilla to begin with. And you can see that it's had a couple shots at it, but now it's in the third leg up, and it's pretty clear that it's back in the business. So really, the test will come at about 130. What can it do in here? Can it get north of that? So we'll see. But we've enjoyed that move in here, I'll tell you that. That was that is the story of the Godzilla pattern. MPS, do I wait for price to break that level on Dish? I would take the price break right away. When the RL10 breaks, it sort of confirms, but that first move on Dish could actually be pretty quick, you know. So as soon as price were to break above this, I think I'd be in. Yeah, as soon as price breaks here, I'd be in. On this one, and every time it's on the short side also, I always take the price break because those tend to collapse much faster. If there was ever a time that you wanted a little bit of extra confirmation, it would be on the upside. Like you can see, even back here, price broke out, but it really took a couple more bars before the RL10 broke. You get about the same entry, you know, but the collapse, like right here, the collapsing dragon, you could be short right there, and when the RL10 breaks here, you're not even getting an entry until you're down here, and you miss that first part of the move. So I am more inclined to take the price break of the RL10 on the short side. Okay, back to the stack here. This is emerging markets. So this was, let's see, 1, 2, 3. This was Thursday. Had a nice run up, closed well. Today, the gap down, but then started recovering. I like this enough that I went with the COTA 2. So now I have 2 positions here because I think there's a good chance for it now to break above this and get to the 10-day or 5-day and 10-day highs. So I was willing to play, even though that's only about +1, I was willing to venture on emerging markets for a second position. That's an aggressive play. It's supported by the fact that it was in summer. And you'll notice that it had the summer, fall, and then became summer later. I was willing to take that shot at it. I wanted to get some non-U.S. exposure. Finally getting back into ETHE. Finally had a timing on this thing that I felt I could manage. It's well above that previous long support level in here. So we got it at 9 1/4 with about a 20-cent risk. Closed at 9.69. So that's 44 cents over 20 cents. So it's a 2.2 R win. Wouldn't be offended if you'd just taken 2.2 in a crypto. But I'm trying to build a longer term position on this one. Mexico, the entry from last week on the PSAR flip after support at the 10-day low. Moving nice. There was an opportunity here, but I took the second position in emerging markets, so I let this one go. This one is holding about 2R and has a nice move to the next test, which is here. So I'll wait until it breaks above this for my second entry. Brazil, COTA 2. Entry on this one. Spring turned to summer. The PSAR had already flipped. Here's where that summer hits when it crosses above the 0 line and leaving the Red River, so that feels like it has some legs. I can see this getting to 27.50 tomorrow easily. If it can breach that, 27.70's in play. Intel patiently waiting. This almost felt like a shakeout. Sideways chop, shake out the weak hands, and then the first burst of buying pressure. Wasn't much follow through. I think I'll be ready on a breakout above today's high to get this long tomorrow, with a stop probably at the bottom of the Dragon or the RL10. Target would be here, 33.30 or 33.50. Second position at 34. IP, I just missed a number of kata 2s in a row on this one. Missed that one, missed that one. There was one here. In retrospect, I'd probably want to take that one again. But this has been solid resistance. Didn't feel like there was all that much available, but we'll see if it can get above, say, 36.40. I can see this north of the. If it gets above the 10-day high, I can see that one. Not my highest priority. IYR, on the other hand, after a long period of failure to fail, I took the PSAR starting the new week. This one has had a really nice run up, and then failure to fail. And this feels like starting the new week, starting another leg. The test will be if it can get above this 10-day high at about 85.50. The short side trade is certainly there. Like if this fails, then the short side trade to here is a nice one. Regional banks, nothing really happening there. 2 days of failure to fail further. And there was a little bit of buying pressure. And the sell didn't last very long. So I could actually see this with a nice tight risk box at 43 or 42.50. Call it 42.50. And short from here or long from there, 50-cent risk. Upper price, you're looking for 44. Yeah, so that's 2-1. And if that goes, it could certainly get to the 10-day high, which is another 2. Like it. Marijuana. This long, beautiful slide, which we enjoyed so much. It's had one surge, a pullback, and so I bought that as a very clear kata 2 with an improving Red River and getting right on the cusp of summertime ready to break. So if this can go, and if it can get above 550, then it should be able to get to 580, and that's going to make this 2, 3, 4, 5, 6. That's about a 7-1 if it can break out of this. It's 2-1 to get to here, and 7-1 up to here. So I like the chances. And then if that breaks, short, easy. Critical state trading. Same play in clean energy. It's uncanny how those kind of work together. Got a micro gain, nice double short, stable, held support, beginning shifted to the summer, starting to move, took a tight risk. Let's see you go. And now this is just a gap, so it should be able to get to 38.50 on any kind of surge. And then if that breaks, then here's the next surge to 39.50 and then 40.50. So you have a really nice price ladder all the way up. But one thing at a time, one position long. I will take the short if it breaks. If it breaks here, I'm short. Rivian, we had a nice run up here. It was a gap down, started to fail. This little gap was no support. This is the test right here. Is this going to be support? And it's sitting right on support. So if that breaks, then it drops like a stone to 74. And if that breaks, to 73. So here's a chance to hold 2 overnight and add to positions for another 4 to 8. Oh, sorry, that was CVS. My bad. Must have hit it with my thumb. Oh, as you were. Rivian, completely different story. Long sideways, failure to fail. Went into the summer. Bought it. Standard risk. Sorry about that. Treasuries dropped. Now I don't feel so bad for not chasing that nice 3-day move that I missed. I mean, I enjoyed that one, but I couldn't get the second leg. Then dropped like a stone to here, and then stabilized at that price. So here is the play on treasuries. You have a really nice tight risk box, short if it goes below 106.70, and long if it's above here. Big strong move ready to go in either direction. Tesla got gapped against. So last Thursday we tried the PSAR flip. This was still well in the spring. Never got close to the summer until now. So we held that one over the weekend. It gapped down, so that's a -2. It sold off. Upon the recovery, I put the revenge trade on. So back long again, and we've got our 2 back. So we kind of scratched out. I could have scratched out, but the fact that it didn't fail further, I still think there's room for that to go. So we'll give it a try. Tesla. And finally, U.S. Steel. Here was the big sell-off. Double bottom on the RL10s. In the spring, leaving the Red River. So you can see that. That doesn't happen all the time, but when you get such a harsh winter, it pulls the Red River down with it and gives it a little room to come out of the Red River still in the spring. So that made this a pretty nice SSC. And then today there was it took off, consolidated. I was tempted here for a second position, but I had enough speculation, so we're holding about +2 and looking for it to get to 26.25 tomorrow. If it breaks above 26.25, I'll add a second position, and up we go. So that's today's swing trades. Here's the intraday sniper trade of the day. STOD. So we are on 3 minutes. And Alcoa. Here's how Alcoa closed last week in this nice tight box. It moved straight out from the opening. Gave us a nice OR3. The next move was up. And you can see, confirmation of the move after this really tight Red River. That breakout just going. 2 or 3 bars, and that stop, that's a 30-cent stop. Probably want to be here, then maybe here. Locking in pieces, check. Caught a 2 reentry, micro gain. Considered the short, but it was such a strong move up. Not. Now I'm stalking the Caught 2. Caught 2 long, standard risk. Failed, stopped in reverse because now this is a Caught 2 to the downside. That gains about an R. That's a stop and reverse. Also a Caught 2 to the upside. Second position, and then scratch the second position for about another 1R. And that brought us into the close for the day. So some good oscillations here in Alcoa. I'm optimistic about the metals this week because that was a clear vote to the upside. And at the end of the day, it was able to hold, a gain of that much. And this was still very tradable moves. Notice the overreaction, the recovery, and now the grind. That one feels a lot like this because it's riding on the crest of this gain. So tomorrow, I'm looking for nice moves in Alcoa. From this weekend, in the Z-scores of the 30-period regression lines, tech is still firmly in the lead. The S&P is growing well. Energy and materials beginning to recover. Finance digging out of its hole, but it has a lot more room to make up. So right now it's all tech all the time. This says, though, that there's room in the metals to really recover because they sold off a lot more than the rest of the market. And then in the battle between staples and consumer discretionary is chugging right along, but these things like Walmart, McDonald's, Coca-Cola are still leading the way higher and looking pretty good. So this gives broad support to the market, and when you combine that with the growth in XLK, this feels like a pretty healthy market right now. The only chart posted today for coaching, Satya, and he traded the U.S. Steel version of the metals. That was even better than Alcoa. So here was that nice tight closure from Thursday. Has a little gap up in the third minute, and the OR3 breakout. He's long with the standard risk box, and takes 6 right off the bat. Why not? He's willing to play the Caught 2 breakout. It doesn't work. He might have played the collapsing dragon here, and as it crosses the VWAP, there was a move there, which would have been a natural exit. There's a Caught 2 potential right here. He does take this one and scratches, so we'll take 5. Nothing wrong with that. And there may have been 10 available today in that one. So that's a comfortable 5. Let's get to the reports. So I did about a 3-hour session this weekend. That's on Patreon. That goes through the weekend report and the daily report, all the actionable signals in great detail. Got good reviews from the guys that have watched it. Especially if you're new, you definitely want to get in there. Even guys that have been following for 10 years discovered things that they might have been overlooking. So that was a master class. If I was doing that on a workshop, that's about $4,000 for a weekend to study that one in just detail. So that's a very good piece of work for you to consider. Let's see if we can get this. The only thing I didn't cover on it was some of the advanced market mosaic pieces, the second and third order effects, but I'm going to do that also this week. And I would tell you the foundations course, covering the top 5 psychological professional stances that you need to have. That's going into the opening chapter of the book. I'm really pleased with what we got done. That's worth your attention. No, it's in Rizuku, and it's on Patreon. On the archive, and also on the regular Patreon main page. All right, so the 150 day. This is the market 150. So we're looking back 150 days. You can see that Kata 2's still working, and now this thing has climbed all the way out of the hole up to the 150 day high. The last time it was here, it collapsed hard, so this is a test. You know, this little piece right here, if it can get above 420, then, you know, the recovery is kind of complete. But failure here would be a Kata 2, and then the test would be right here. So be mindful of how quickly those bears can recover. Not out of the wood. We're never out of the woods, but you should know that. This is the regular daily, 30 days. This has some real Kata 2 opportunities here. There's our 0 state for the daily range. It's just a half step to break above the 30-day high, and then off we go. Lots of room to the downside here, so you got to respect those stops. The summer has broken out of the Red River, excuse me, and is pinching in the fall, a nice little distance above the Red River. If this were to resume, that's going to be a very powerful sign. But if it starts to fade, then you would see this start coming down here, and that breaks. You can't be in this any longer than the southern skin of the dragon. But I would respect this stop right here. No sense getting optimistic now. Looking at the 30-minute, kind of our tactical aggressive swing, got a nice double bottom forming here at 406. It sold off, but then had a nice little recovery day, and that's 2 runs it's had at this level, and one more surge like that, and it's above this hump, and then it's free and clear. Liking it. But again, below 406, I'm instantly short, looking for these support levels all the way down as price targets. And then if the 10-day fails, I will have already been so short. Make your head spin. Dashboard 1. This is favorable. Bullish, quiet. Overbought all across the board. Green bullish on the long term. Risk on. Nice. Dow Tactical. Just a couple auto framers. I like the Caterpillar trade, and I like Apple's weakness today, which gives us 2.3 to 1 to the upside. So if we can see some strength in tech, don't be surprised tomorrow to see Tesla and Apple in recovery mode. And don't neglect the strength in NVIDIA. In the ETFs, just a couple auto framers, some strength in agriculture, but otherwise a quiet day that did not fail. And that's the news from there. Auto framers, just a handful. Caterpillar and Tesla, I've got swing trades on them, so I'll be working those carefully. Intel, Cisco, and Johnson & Johnson are high on the stack. Not quite 2-1, but those have some real potential. Lots of daily squeezes because their daily range was so small. You got Brazil and diamonds and the S&P all within that 2-1 squeeze. That's a very good sign for a market that's poised to explode. 3 Godzillas in the S&P, all very quiet ones. The VIX remains in a Godzilla mode. That's very good for the long side. No double greens in any of the volatilities. Standard work in the sniper and the auto framer. So I've got this sorted by the reward to risk ratio. So this, is a replay of the spreadsheets version. Here's the line at 2-1. Tesla and Squarespace come to mind. Now, what's interesting on this one is, clean energy was 1.67% today and is still 2.5-1 reward to risk. So you could be getting second day momentum even just for the swing trade. Alcoa remains a good swing trade possibility, as do the Texas Instruments and Intel. NVIDIA, on the other hand, is pretty well fully valued, although it had a strong move today. It was the best in the Dow 30 modified. Dominated in the MACD by the summer and spring. This is growing season, and it's all going. Notice that there's no evil volatility anywhere in our tactical symbol set. The absence of volatility is remarkable, which makes me want to go back and look at VXX again just to make sure, to see if I need to put a protection play in on that one. The winners today were in the cryptos. Ethereum is just rocking. Cliff, Goldman, and Nike. U.S. Steel, nice recovery. Caterpillar, nice recovery. More blockchain. And the Dow is looking strong. So that's where you get that kind of XLP and conservative staples. Last but not least, the frog list for trading value is looking at the multiplication of large average range percentage plus strong frog quality number for consistency gives you this trading value ratio, and then we rank it by that. So we get ideal trading candidates: Tesla, marijuana, clean energy, NVIDIA, Devon. It tells you what you need to know. Those are the routine moves that are getting us paid. Market mosaic time still stabilizing. Stuck right in the middle. There's still room to go in either direction, but the indication is up for the channel to complete, and the 200-day moving average price relative is ready to break out. So I treat that as strong. And then the all-important slope of the RL30 is just barely above the long-term average in the zero line. So it just went positive, and it doesn't get overdone until it gets to Z1 and Z2. So there's plenty of normal growing season left for this market, which has been, after a sell-off, has stabilized, grown, stabilized. It's ready for another leg. Can't be surprised if that happens. That's everything we've got. We'll get it published and posted and be ready for them tomorrow.